Interest rates in the UK are on the rise. We saw them creep up in August of last year, and if we went for the sideshow that is Brexit, they'd be going up a hell of a lot faster. But one thing's for certain, they're going to be going up again. So how does this affect you, and how can you protect against it? If your interest rate on your mortgage rises, it's going to cost you more. Simple maths. If the base rate increases, your mortgage provider will pass that cost on to you if you're on a variable or tracker rate mortgage. So speak to a mortgage broker and see if there's any fixed deals that can save you money, because remember, if you've got a £120,000 mortgage and the rate goes up by say 1% a year, that's an extra £100 a month it's going to cost you. Pay off your credit cards. This should be a priority regardless of where interest rates are, because credit card rates are ridiculous. There's only ever one winner. If you're running a balance on your card, and it's the banks. If interest rates increase, chances are your credit card provider is going to hike their rates up too. Don't tie money up in fixed term accounts. What's the point in tying your money up for the next 2 or 3 years for a measly 2%? Because if interest rates increase in the next few months and your money's tied up, you're going to be kicking yourself. So either hold on to the cash, or if you don't need it in the short term, look at investing it into the markets. If you're looking at a major expense such as a new car or a home extension and you need to borrow money for that, consider doing it now while it's cheaper. Get a cash equivalent value for any frozen defined benefit or final salary pensions that you have. This is different to the annual statement that they send you. You have to request it. Without getting too technical, a big part of how these pensions are valued is linked to interest rates. The higher the rate they can get, the less money they have to allocate for you, and vice versa. The lower the rate, the more money they have to allocate. So now may be a very good time to take stock and work out what your options are. However, bear in mind, for most people, this will be your largest and most important asset when it comes to retirement planning. So make sure you get professional advice and don't do anything too hasty. Thanks for watching, and let us know your view on interest rates. When do you think they're going to increase, and by how much? And if you enjoyed the video, the biggest compliment you can give me is by sharing it. And don't forget to tune in same time tomorrow. See you then.